Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today is episode 154, Getting the Most from Your 401k. Thank you for joining me back on the show. Hope all of you out there are staying safe and healthy during this horrible pandemic. For today's topic, I wanted to talk about 401ks. And if you work at a company that offers a 401k, a big misconception is that all 401ks are treated equally, and they're actually not. And if you don't know what a 401k is, simply defined, it's what's called a defined contribution plan, or an employer-sponsored plan. And what it is, it's a benefit that a company will offer employees to retain and attract people to come join their organization. Many, many years ago, pensions were a big deal, and those are called defined benefit plans. And so formerly, employers would take the burden of retirement on their shoulders and literally put money into an account for their employees, manage the money, invest the money, and then pay them out to them upon their retirement. Well, I think that burden became pretty steep. We've had some pension funds become underfunded. And so many employers now will pass that burden back onto the employee to take care of themselves, right? Which, is a good thing as long as you remain educated, diligent, disciplined, right? So for the undisciplined person, or maybe someone that's a little ignorant to it, it can be very bad. And again, one of our main goals here, if not the main goal, is to help clients improve their financial literacy. And that's one of the main goals of Upticks as a show. Okay, so let's talk about 401ks. And again, not all of them are treated equally. But I want to go over, 3 or 4 tips when looking at your 401k so that you can make sure that you're getting the most of it. First and foremost, by far, the most important thing when dealing with a 401k is you want to be aware of and make sure that at a minimum, you're getting the match. And so what this means is many times companies will say, you need to put 3% in and we'll give you 1.5%. Or maybe you need to put 3% in and we'll match dollar for dollar up to the 3%. So it's a little confusing sometimes in the lingo. But you want to make sure whatever that match is, whatever you need to do to get that match, you're doing. And a lot of people, particularly younger clients, will say, well, I can't afford to do that right now because I've got student loans or I've got other debt. Or maybe even an older client say, well, I'm trying to get out from under credit card debt. So I don't really want to be able to do that right now. I'm telling you, you can't afford not to take care of a company match. Because if you think about it, if they're going to match dollar for dollar for 3%, that's literally 100% return right then and there. And no financial advisor, I don't care who they are, can do that for you year over year, right? Double your money every single year. So again, and no interest is typically that high either, right? So even if you have a credit card that's 15% interest, or you've got a student loan that's 7%, whatever, they're not charging you 100%. They're not doubling your debt every year. So you want to make sure at a minimum, not a maximum, at a minimum, you're putting in money to get your company match, right? So if you're not contributing to a 401k, you definitely are costing you and your family potentially literally thousands and thousands and maybe hundreds of thousands of dollars, depending on how much money you make, how long you work and how much money you make. So again, very, very important. The most important thing that I'm talking about is just make sure you're setting up that 401k that at a minimum, you're putting in enough to get the most out of your 401k in regards to a company match. So you say, okay, Jake, I get that. Yeah, that's common sense. So now what? What else can I do to get the most from my 401k? Well, like I've talked about already, not all 401ks are treated the same. And so your 401k, along with every one of them else out there, has what's something called a summary plan description. And that, simply put, is the rules regarding your 401k. And that's something that you should familiarize yourself with. And if it's too jargon filled and you want us at Falcon Wealth Advisors to read through it and then translate it to you in English, we're happy to do that for you as well. But a summary plan description will also talk about how much, not only will talk about how much will they match, but also talk about the different types of buckets that are available. So a traditional 401k would be pre-tax, meaning You make, $10,000 a month or whatever it is. If you put $1,000 a month in your 401k from your earnings, that $1,000 comes off the top pre-tax. So you don't pay taxes on it. You only pay taxes in this example at $9,000 is your gross income. That's a very common traditional way to do that. And nothing wrong with that necessarily. Then we have an after-tax version, right? So that would be in the same $10,000 example. You may be putting $1,000 in, but instead of that $1,000 not being taxed, your whole $10,000 is taxed as income, and then you put $1,000 in. And then something very similar would be the Roth 401k, where you put money in after tax, but the beauty with the Roth is that money that goes in there is going to grow tax-free. So it can get quite rather confusing, and there's no right or wrong answer here. I can't just tell you on today's show, hey, this is what you should do. It's not a no-brainer like getting the company match. Everybody's tax situation is different. We're dealing with a lot of unknowns. We're dealing with a projected future tax rate. So again, that can get complicated. We do like to look at tax diversification. So ideally, if you're young enough and you can split it up into 2 or 3 different tax buckets, that's probably going to help you versus just doing all in one. If you're a little bit closer to retirement, it might be too late and you might be in too high of a bracket to really get the most benefit from doing that. So again, review your summary plan description, look at the different options. If you don't understand them or want to talk to a qualified chartered retirement planning counselor, such as myself or Corey, please feel free to let me know, and we can certainly set up a call or a meeting in person to do that. All right, so you say, okay, Jake, I got it. I'm going to at least, at a minimum again, you can put more in a 401k than whatever they match. So I think it's a big misconception also. A lot of people say I'm maxing it out because I'm putting 6% in and they match 6%. Well, you're not maxing out probably, or you might be. Typically you can put, it's over $19,000 as an individual. And then if you're over the age of 50, you can do a catch up, which is 5,000 or 6,000 more than that, or 7,000. I mean, it's a lot more. So you could put potentially somewhere between $20,000 and $25,000. And again, don't take this as advice. There's a tax code that has this rule out, but you could probably put, so if you make $100,000 and you're putting 6% in, you're only putting $6,000, and you've got a lot more room to go if you truly want to max out your 401k. But for today's show, again, the no-brainer number one is get the most out of it by getting at least what the match is. And then you want to make sure you're reviewing, do I put in pre-tax, after-tax, or Roth? Weigh that with your tax advisor, with your financial advisor, and see what makes most sense for you. All right, good. Then we'd go down another layer, how to get the most out of it. You're not quite done yet. The next step would be making sure that your investments are appropriate, aligned with your financial plan, right? So again, we've got a financial plan for our clients at Falcon Wealth Advisors. Then we recommend an asset allocation, whether that's half in stocks, half in bonds, or so much in international, or so much in gold, whatever that may be. And we line that up here with the assets that we manage at Falcon Wealth Advisors. We can do the same thing for you typically, or get close to it within your 401k. So it's not as simple as just putting money in there, because if you put money in there and you invest it incorrectly, maybe you're too aggressive, or maybe you're too conservative. And if you work somewhere for 10, 20, 30, 40 years, compound interest could actually work against you because you haven't taken full advantage of aligning your investments with your financial plan. All right, so that's very important, right? So that's step number 3, is making sure that you're properly invested. And part of that, a big misconception out there is a lot of people think that 401k plans are free, and they're not. And so typically the cost, the administrative costs are typically very low, right? Maybe it's $50 a year, $100 a year, or they charge you $25 a quarter, whatever. But you have to be careful, because the investment vehicles within the 401k, the mutual funds, which they typically are, I think now even some plans are offering annuities, or you might be able to go out there and buy individual stocks and bonds potentially. Most of the time, most all of the time, that all comes with a cost and a fee. And you want to be sure to look at the prospectus. And again, I don't expect our clients to do that. So if you're a do-it-yourselfer, you got to look through every prospectus and you got to weigh the fees, because that's going to play a role in the performance, right? And that's something that we do, again, for our clients at Falcon Wealth Advisors. We will do the due diligence on all the investment options, the menu of funds available, and we will definitely take fees into consideration when helping you build out your asset allocation within the 401k plan. So it's something that you want to be aware of. It shouldn't be the end all decision, right? So you shouldn't just choose the cheapest fund, but you definitely want to weigh in on those fees because many of them can be rather expensive. And again, there might be something similar within the plan that cost half as much. And so if you project that out over 10 or 20, 30 years, that performance could be that much more by having a lower cost fund that you're choosing versus the high cost one. All right, so it's very important that you're looking at fees within the 401k, and they're not free. Again, maybe occasionally if you get maybe a small business, maybe they eat those costs, but I don't see it very often at all. Most times, all of those mutual fund fees are transferred right on to the employee and you're paying them. All right, good. So quick recap. I've got one more tip for you that I've already kind of alluded to, but number one, make sure you're getting at a minimum the company match. I can't stress that enough. I see it sometimes where people won't be contributing at all to their 401k, even when their employer matches. And I know everybody's financial situation and their budget and times are tough, but I'm telling you, it's 100% return on your money when you do that. So you almost can't afford, or you can't afford not to do it. Okay. Number two, you want to look at the different tax buckets, right? Do I do pre-tax? Do I do Roth? Do I do after tax? Jake, it's all confusing. Perfect. Pick up the phone, give me a call, come to me. We will crunch those numbers for you. We'll work with your tax advisor and help you make a good informed decision on that. And then three, making sure your investments are appropriately aligned with your financial plan and looking at the internal fees associated with those investments to make sure you're getting the most bang for your buck. Now, before I go over my fourth tip here that, again, I've already alluded to, I want to give you a quick plug here, a quick commercial. If you're not already subscribed to our content, thank you so much. I'm so humbled. We just broke 300 subscribers on our YouTube channel, which is awesome. It's basically been organic, right? We're not paying YouTube ads, right, to get our stuff out there. It's from you. It's from our listeners liking and sharing our content. So thank you so much for subscribing. If you're not subscribed, I highly encourage you to go ahead and do so. We're kicking out content every week on this platform. Also, if you're listening to this on your favorite podcast platform, thank you so much. A thumbs up would be greatly appreciated. And please feel free to like and share our content. Also, if you and I are not personally connected on Facebook, LinkedIn, Instagram, or Twitter, go ahead and send me a friend request. I love building out my network, and I also push out content and fun posts through those platforms. Also, my team, Falcon Wealth Advisors, we are also on the same 4 platforms. Okay, so I did a little bit of a teaser there. So what is the last tip, Jake? What's so important? And the one, again, that I've already kind of alluded to is don't stop saving, right? Save for the reason to save alone. Even if your 401k is, at $4 million and you're going to retire in 3 years, that's no reason to not keep putting money in there. We see it time and time again. Things come up in life and you may need to move and buy another home, or your kids may need help, or you may need to, some long-term care and need to go into a facility. It doesn't hurt to save while you're doing it. I would highly encourage our clients to max out their 401ks or max out a brokerage account. I guess you can't max out a brokerage account, but make sure you're putting the IRS max in your 401k and just save for the reason to save. Now, I want you to take that though with a little bit of a grain of salt, because I'm not one of these stodgy financial advisors that says you have to pinch every penny. That's not what I'm saying here. I'm saying I want you to spend a lot of money on things that you value and little to no money on things that you don't. And I'll give a quick example. If you love gourmet coffee, then you should be spending money on gourmet coffee. I'm not telling you not to do that. But if you don't really like coffee, such as myself, I don't drink coffee. I spend $0 on coffee, right? I'm not doing it, right? Because I don't enjoy it, right? So some areas of my personal life, I spend a lot of money. Some areas I don't spend hardly anything, right? And that's how I encourage you. That's what's going to allow you to live a much fuller life, a happier life. Your budget's going to look healthier, and you're going to get the most, benefit from the capital that you're working so hard to save. So again, don't stop at the 6% match. Keep going if you can afford it. Go out there, work through your budget, spend a lot of money on things that you enjoy, experiences, things that, that'll make memories, that'll make you and your family happy. And don't spend money on things that, when you're wasting money. Don't spend money on those things. Anyways, that's my tip on your 401k. Again, getting the most out of your 401k. If some of this is confusing to you or you don't understand, please feel free to reach out to me or my team. You can simply email me at jake@falconwealthadvisors.com. I'm happy to share a link to my schedule. If you don't want to come in the office, I get it. We can set up a phone call and go through some of these options with you and make sure that you too are getting the most from your 401k. As far as fun topics, it's getting hot in Kansas City. I think I've talked about this on an earlier show. One perk for a golfer when it's hot is that your golf ball goes further. I don't know if that's a mental thing, but I firmly believe when it's 90, 100 degrees outside, my golf ball goes further. So I will put on the sunscreen, I'll double down on my water, and I will go out there and trudge through the heat just to see my golf ball go 3 more yards, right? Call it weird, whatever it is. That's how it works, though, in my opinion. But same in the Falcon household. Having a lot of fun with Rachel and our favorite Pooch Einstein. He's been a lot of joy and just enjoying the summer. And hopefully, the Olympic Games, it'll be fun to watch that. I know that's, as of the recording of this, it's the opening ceremony right now, literally. So I'm really excited to cheer on, Team USA and all the athletes. Rachel and I have gotten really into fencing. Or we were, at least in the winter. We need to get back in there. But I'm really excited to watch fencing because I know a little bit more about fencing than I ever have in my life. And it'll be really fun to watch that at the highest level in the Olympic Games. So again, thank you so much for tuning in. It's all the time that I do have for you today. Hope all of you stay safe and healthy and that you have a great week.